Okay, so let's have a look at the revised budget section. So a revised budget is where you look back at your original budget and there might be changes in your circumstances or things might change. So you need to revise or you need to change your original expense or your original income that you have in your original budget. So in our original budget, just like we've had in our previous budget, we'll have planned income, we'll have our planned expenditure made up of fixed, irregular, and discretionary. And then we'll have our total expenditure, net cash, opening cash, and closing cash. And we're going to be given little scenarios in the question itself on whether the expense or income is going to change or not. So we take, for example, in original budget, Alex Dunn salary is 3,000, so he's going to earn 3,000 per month. So if you look over here, as part of our question, it says Alex Dunn's new annual salary would be 48,000 payable per month from July. So that's going to change. That's going to be revised. So we'll have the revised budget here. And in July, so it's now going to be 48,000 and it's going to be per month. So you're going to divide it by 12. So in your calculators, you're going to put 48,000 divided by 12. So now he's going to receive 4,000 per month. So August is going to be 4,000. September is going to be 4,000. Then you're going to add the three of them up. And that's going to give us a new total of 12,000. So his salary is now revised. He's got an increase. So instead of being 3,000, it's now 4,000. Emma will job share from the 1st of July and her salary will be reduced by 50% from that date. So Emma's salary is 2,600. So that's how, from our original budget, that's how much she's going to receive. Now, to revise, she's only going to receive 50%. So you're going to take 2,600 in your calculator and you're going to multiply that by 0.5 and now she's going to get 1,300. So half of 2,600 is now 1,300. So for each month now, she's going to receive 1,300. So she's not going to receive the 2,600. It's 1,300 per month, and then you're going to add those three. So in your calculators, 1,300 plus 1,300 plus 1,300. So now she's going to earn 3,900. So her income is now decreased. Okay, so each one of these planned income and planned expenditure, depending on the question itself, they're either going to be revised. So that means they're going to go up or they're going to go down. And if it doesn't mention anything, then you're going to use the figures from the original budget. So mortgage repayments then, so we've skipped child benefit. So we've gone down to mortgage. So child benefit is not being changed, so they still have the children. So it's going to be 560 per month. And then your total column then, you're going to add them up. So 560 plus 560 plus 560. So that's going to give us 1,680, which is the same. And then we get our total then for July, like we did in the original. So you're going to add up your column. So 4,000 plus 1,300 plus 560. Same for August, 4,000 plus 1,300 plus 560. 4,000 plus 1,300 plus 560, and then the total then 12,000 plus 3,900 plus 1,680. So that's now our revised budget. So the original budget, so circumstances has changed from the original budget. Alex Dunn got an increase in his wages. So his increase was 4,000 per month, which was the 48,000 divided by 12, because there's 12 months in a year. Then Emma is job sharing. So from July, her wages are going to be halved. So instead of being 2,600, they're now 1,300, and they still have the child benefit. So just like we did in the original budget, we added up a row to get our total for the income, and we added up the column to get the total for our month.